Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be working with the EMA envelope and we will be adding the MinMax for optimizing the entry and the exit points. Moving average envelope is a simple indicator. We use the EMA and then we add the standard deviation to create the upper and the lower band, and for today's setup we will be utilizing the default values. Of course we can change it as per the requirement, but I think even the time period of 14 along with the standard deviation of 0.1 is also a good enough combination, and suppose if you feel like you can change it as per your preferences. Min-max is also a simple indicator, the lowest and the highest values over a specified time period. Before we go into the detail, this is a standard disclaimer. Again, I would like to remind you that this is simply a tutorial session where we will be developing the algorithms, and suppose if you want to use any of the algorithms, I would recommend that you do extensive trial runs, and also you allow it to run for sufficient enough time on the demo account. No claim is also being made regarding the profitability or otherwise of the algorithms which you will be developing during the session, and of course nothing in the webinar is to be constructed as an advice for any trade or for any particular setup. Let's see how things look on the chart. So this is the 4 hourly chart, and we are basically going to work with the 4 hourly setup. Of course you can change the time frames daily, hourly, half an hourly, and for today's session we are going to work with the 4 hourly combination, as I feel that it's also good enough for our purpose. And suppose if there is any change in the medium term, we can pretty much change the direction of our trade using the 4 hourly, and there is not much of a lag. So here I will show you on this chart. So as you can see, this is a fairly good, but of course sometimes when there is a congestion in the price action, then it also tends to flatten to some extent. Then we have to use some other factors to make sure that we are not making undue errors in the trade execution. But apart from such sideways momentums, whenever the price action is trending, more or less we get a good idea of where the price is headed. So here, as long as the price has been below this upper band of this EMA envelope, and also the envelope's values are continuously falling, so we can set different parameters to compare the current value of the EMA band to the prior values, maybe a day back, 2 days back, whatever suits our purpose. And we can check the EMA envelope values to the prior values, and then see if the EMA envelope is falling, then most probably it benefits us to stay on the short sale side. If the EMA envelope is rising and the price action is in the upper side of these bands, then also we want to be on the buying side. So here, if we go back in time and see here, then more or less the assumption, if the EMA bands are rising, then we should be looking for a buy trade, and if the EMA bands are falling, we should be looking for sell trade. Holds good. Of course there will be some wrong trades, and sometimes the envelope starts to rise then falls, and it happens with a short interval. So in such times it will be difficult for our algorithm to make money, but then there is no silver bullet. Of course everything will make some errors, and our job is to make sure that we don't end up losing too much of money if there is not enough momentum, and we don't want to be losing money unless it is kind of part of the setup. So here we are, and for today's session, what we will do, we will compare the current value of the EMA band, the high band and the low band's value to 6 candle periods back, that is day, 1 day, as we are utilizing the time frame of 4 hourly candles. So 6 candles back is 24 hours back, and we will be looking for buy trade if the EMA envelopes values are rising, and sell trade if the EMA envelopes values are falling. At the same time, we want to make sure that we are not getting involved into any trade when the price action is actually moving downward. So we can do it two ways. First, we will make sure that the trade should execute on the buy side only after the last candle of the 4 hours has closed in green, that is the closing price was greater than the opening price, and we want 5 hours or 4 hours or 5 hours should have passed since the minimum value was below the lower band. So we want the minimum of last 5 hours to be above this lower band. That will mean that the momentum is now subsiding, the correction phase is now getting we are getting done with, and after due consolidation, the instrument, the underlying instrument is getting ready to rally higher. So we want to utilize this kind of setup, and for that we will be utilizing the min-max. And for the sell trade, we want same thing. We want the last candle to have closed in red, that is the closing value should be less than the opening value, and also as I said with the lowest price here in case of the sell side, we want to use the maxima. So we will be looking at the maxima, and last 5 hours maxima should be below the high band of the EMA envelope. And also one more thing, we want to make sure that there should not be too much of an trading when the price action has already moved away from the envelope. So we will be utilizing another calculation expression setup, and there we will put in the condition where we will define certain limits on the last closing price, and only if the last closing price and last tick price is within that price limit from the band, then only we will look for trading opportunities. Otherwise, we will simply sit on the sidelines, and we want our setup to be profitable on most of the occasions, and to make sure that we are getting involved in the early stages of the trend. We want to make sure that the minimum price should be below the high band of the EMA envelope whenever we are into a buy trade, and the high price should be above the lower band whenever we are into sell trade. And also we have already set in the condition that the last candle close should have happened in the direction of the trade. So that will also help us make sure that we are trading with the trend, and not many undue errors, or it shouldn't happen that algorithm is trading when the momentum is now shifting to the other side. So here, as you can see here, that the last candle has closed in green, and also as you can notice that the EMA's high band and low band's values are higher than the prior values, the values which might have been there day back, and then there is not much of a momentum. So in such cases, we want to avoid multiple trades. We will be looking for a single trade setup, and to make sure that is the case, we will do some optimization also as we move forward with the help of ATR, and that will ensure that if the trade is open and if it ends up in loss, not many attempts should be made. So we will define the conditions on lower time frame to make sure that is the case. So let's get to work on the visual J Forex platform. Today is 30th of March, so we have named today's algorithm as March 30th. Let us do the standard instrument subscription. We will keep on candle on tick, whichever suits your purpose. Let us keep it on candle as that will make the test run a bit faster. The basic difference is on tick, on every tick, the algorithm will be checking for fresh trades, and if it is on candle, only when the default candle close happens, it will be looking for the new trade. So here default instrument, then on candle, last bit candle, candle instrument, Euro USD it is. We'll bring in another block. It should be equal. Again we check the candle instrument to be Euro USD. Here we will select the Euro USD. So here is Euro USD, we got it. Okay, job done, the instrument subscription. Now we define the position amount. Position amount should be 0, and for that we want the position info. Here is the position info, all position amount. We are taking all positions, so if there is any pending order also, it will be included. And we want the position amount to be equal to 0. So here we will color this flow, so we will notice if there is a break in the flow. So far so good. Now let us bring the EMA envelope indicator, MA, and here is the EMA envelope. Position amount should be equal to 0. We will need 2 of these, so we are bringing in 2. Let us change the candle period value to 4 hours. Shift 0, deviation is 0.1, and then we make it 6. So it will be 6 candles back, 1 day back. Okay, and here are the low band and the high values. We will also need a historical candle. Now we need components info. So here is the historical candle. Again, it should be of 4 hours. Euro USD 10 minutes. We will change it to 4 hours. Shift will be 1. And here is the value. Now we bring in the min-max values. So here is the min-max. We will need to use 2 blocks of the min-max. Default here we make it to 4 hours. No, not 4 hours exactly. I think it will be better if we want the 5 hours data, and for that we will need 300 minutes data. So even if we keep it of 10 minutes, and if we utilize the time period of 30, it will do the job. So it's fine as it is. We just need to make changes here. If it is bid, we will take the low price, and when it is ask, we will take the high price. So this is the setup. So we are done with bringing the basic indicators. Now again we will need to go back on chart to see how to proceed ahead. So here let us use this as our demo uh, instance, the instance to demonstrate the buy setup for our algorithm. We want the minima of last 5 hours to be above the lower band of this EMA envelope. We will be comparing the EMA's high band, the low band, high band and low band's values to the prior values. So we are going to use the if conditions for that, and then the min max conditions, then the last candle close also we will be checking for that. And also we want to put in one condition here, that there should be enough of momentum, that is if suppose if the candle is closing in green, then we want there should be minimum difference between the candles open and the candles close, and we will keep it according to the ATR, and that minimum difference should be there. And it shouldn't be the case that if there is no momentum in the price action, and at such instances no trading should happen. So just to make sure that we are buying at the right instance, we want to make sure that we are looking for the price action also. So we add the ATR, and then using the ATR we will define the minimum volatility. So let us bring in the ATR, and the average ATR for last 14 period has been 65 pips for the Euro USD, and but these are not normal times. Let us go back a bit when the situation wasn't so volatile, and here 16 pips, 18 pips used to be a norm. So we can define a condition where there is difference between the open price and the closing price of at least 15 pips or more than that. So, and I think it should be good enough. Or in terms of ATR, so let us see what is the ATR now on the daily time frame. Now the ATR is more than 150 pips, and in earlier times it used to be in the vicinity of 50 pips. And when it used to be around 50 pips, the 4 hourly ATR used to be of 17-18 pips, and now when the ATR is 150 pips, the ATR for 4 hours is of around 60-65 pips. So roughly one third of the daily ATR can be used as a basic condition for the difference between the closing and opening price of last candle, and I think that should be good enough for our purpose. So let us again go back on the Visual J Forex platform to define that requirement. We will need to bring in the ATR. So let us look for the ATR. We will need the indicator, and it is given in other. Yes, I am right here. So there is the ATR. Let us connect it. We will be utilizing the daily time frame. Shift will be 1. And yes, it is good on the bid and the closing price. So that looks fine. And I think we will need a bit of a stability also. So just to make sure that, see, suppose if let us go back on the smaller time frame, and if as here we can say that 45 pips should be the difference between the opening and the closing price, and let us assume that difference is being made, and if our algorithm is going to execute the trade in next 4 hours, then we want the stability in the price action. It shouldn't be the case that it is falling and still our algorithm is executing the trade. So we want the stability to be there, and we will be utilizing the minima maxima conditions for last 15 minutes. So if the buy trade is going to happen for last 15 minutes, the price should be rising, and to make sure that that is the case, we will be putting in one more condition, that the current minimum value should be less than or equals to last 15 minutes minimum value, and for that we will define the minima and the maximum on the lower time frame as well. So we will bring in additional min-max blocks here, mathematical, and we will use, I think, 1 hour's value should be good enough. So here we make these 5 minutes, this one also 5 minutes, here we keep the shift as 0, and we change this to 12. 1 hour's data. And we will need further MinMax blocks, 2 more. Let us bring 2 more. One will be the bid low price and another will be set at ask side on the high price for checking the maximum values, and bid with low price will be utilized to check for the minimum values, ask and the high price. Now we will define these two blocks at shift 3. The time period will be of 5 minutes only, and this will be shift 3, 15 minutes back. Time period is of 12. And here bid and the low price. Shift 3, and here 12 with the ask side and the high price. Okay, so far so good. And here I think we are also done with the time almost. So today we will wrap up our session here, and tomorrow we will be continuing to work with this and then add the buy side and the sell side with the help of if block. So far we have brought in these min-max conditions, indicators, ATR and historical candle to help us guide the determination of the trend. So thank you all for joining in for today's trading session. We will be back tomorrow. See you tomorrow. Goodbye.